I thank you all for your attendance as part of the CPA UK lunchtime discussion series. I'm not sure if anyone yet has come up with a joke that begins with a lawyer, a development campaign worker, and an African politician and an Irishman walked into a meeting. But this is that event. The focus of this meeting is looking at the human cost of illicit financial flows, and we know that there's a lot of focus on in this Parliament. We have the All-Party Group on corruption and indeed others who have been working on these issues, and a number of NGOs have been campaigning very strongly, both in Parliament and across many regions and cities on a number of issues in relation to corruption and tax avoidance and other illicit flows. Here today we have a panel to address us. Toby Quantrill, Tim Daniel and John Cheyo. So they will speak in that order. Rather than doing the full introduction of everybody in advance, I will introduce each of them as they speak, so that you as members of the audience have a sense of some of the experience and the perspective that each of them bring to this. Before I move to the first speaker, I should just do a short plug for a future event, which is an international parliamentary conference, which is on the subject of the role of parliamentarians in managing economic growth for equitable development, and that takes place here in the Houses of Parliament in November. It will run from Monday the 17th of November to Friday the 21st, and it's going to look at big and wide issues like what does good economic growth look like, how do nations ensure that the benefits of growth reach the most vulnerable, how can legislators influence governments to deliver, and why do strong institutions matter. So that's the 17th to the 21st of November, and there's a full programme for that. Unfortunately, we don't have them distributed here, but take my word for it, and people can make the appropriate inquiries and follow-ups yourselves. The first speaker from today's panel is Toby Quantrill. Toby has worked in international development for over 20 years, covering quite a range of issues: environment, health, disability and trade. As Principal Advisor Economic Justice with Christian Aid, he leads a team that develops new positions and policy proposals to support campaigners for tax justice, and also looks more widely at the economic system, particularly its impact on poverty and inequality. Sometimes accused of practicing economics without a licence, he does, of course, bring useful practical experience and an important perspective to debates that are often complex and can seem far removed, not just from what people might call normal people, but from those of us who find ourselves even dealing in public policy forums as well. As we know, Christian Aid has been a very strong pioneer in the tax justice campaign globally, with a very strong reputation for working collaboratively across civil society, government and private sector. And its new publication on tax and the common good brings a compelling perspective to a critically important issue of the moment. Toby.
Thank you. Thank you very much. So my task, as I understand it, is to provide a bit of a whistle-stop tour through the whole subject of illicit financial flows in about 8 minutes, which is going to be challenging, but I'll give it a go. I'm going to talk a little bit about what illicit financial flows are from my perspective, what I understand them. Talk first about Christian Aid and why we're involved in it. Talk about some of the scale, possibly touch on some specific examples. I may not have time. Talk about the potential impacts and touch briefly, hopefully, on the solutions. So that's where I'm hoping to go. First of all, though, Christian Aid, the organisation that I work for, Christian Aid describes itself as a Christian organisation that insists the world can and must swiftly change to one where everyone can live a life free from poverty. Christian Aid provides urgent practical assistance, but it also works for more profound change, trying to tackle some of the causes of poverty, and that's something that it's been doing for a very long time. As a relative newcomer, I must say it's been quite a pleasure, quite a slightly different experience and a real pleasure to be able to deal with an organisation where discussing issues from the perspective of morality is allowed, indeed encouraged. Too often we're told we have to be objective about these kinds of issues, especially around tax. We have to be very objective and to be able to talk about the morality of tax has been quite a breath of fresh air, and just a plug in a way for this document that was mentioned that we launched last night on tax and morality, and looking at tax from the perspective of the moral case. So that's one of the reasons we work on these things is because we think we can bring a slightly different perspective. More generally, though, we work on tax illicit financial flows because they are critically important sources of finance. We came to understand that while aid is critical, aid is important, it is just as important to think about the money flowing out of countries as it is to think about the money flowing in and to think about how those things interact. And this is something that's going to become, I think, increasingly important over the next 6 months as we run up to the Financing for Development Conference, UN Finance for Development Conference, which we held in Addis Ababa in July next year, and then the UN Summit to agree the new Sustainable Development Goals in September. And there's a lot of interest as we begin to understand that aid alone will not be enough to fill the gap, and the gap has now been recently estimated at around $2.5 trillion. Aid alone, while critical and important, will not fill that gap, and we are increasingly, the conversation about what the other sources of finance are is becoming increasingly important, and domestic resource mobilization and taxation is key to that. So illicit financial flows, something that we work on, what are they? Now, I was rather relieved, having sort of slightly worried that I couldn't actually give a dictionary definition. I was slightly relieved to be in an event recently with some of the global experts on this subject, where it emerged that nobody had one set definition. But my understanding is, the way I see it, there are two key sort of elements to an illicit financial flow, something that would be defined as such. The first, that it is money that flows out of a country and is unrecorded, out or in. So it's unrecorded finance. Secondly, it is in some way related to illegal activity, whether that's proceeds of bribery, whether that's proceeds of criminal activity, drug trafficking, human trafficking, and so on. Or, and this is probably the largest chunk of the money involved, it's the commercial proceeds arising from the import and export transactions and manipulation of prices deliberately. So it's linked to illegal activity. Now, there's also a grey area between illicit financial flows and tax avoidance, where there you have the most aggressive forms of tax avoidance, which are sort of on the boundary of legality. We don't include that in our definition, but some people do bring that in as well. So how big are they? The organisation that we tend to refer to, we don't do our own research on illicit financial flows. We've done some research on tax avoidance, but we tend to rely on the Global Financial Integrity Organisation based in Washington, which I think we believe does the sort of cutting-edge research in this area. Their estimate is around 950 billion out of developing and emerging economy countries globally every year. So it's almost $1 trillion a year, shifting out. That is probably a conservative estimate, almost certainly a conservative estimate, because it misses out a number of key things. So it doesn't include trade in intangibles, so illicit financial flows relating to commercial trade in intangibles, services, IP, intellectual property, and so on. That's not included in that. That could be up to 25% of global trade. So there's quite a big chunk of potential financial flows missing there. And it doesn't include cash transfers and there's a few other reasons. So it's got to be, I think, sort of seen as probably quite a conservative estimate. It's based on the best available data. It's based on the data from the IMF, the World Bank, that everybody uses, that other people use, that most economic analysis use. So although there are always errors in this kind of data, and as somebody, I've used some of these databases myself for some work I did on trade, And I have to say, even sort of Mark one eyeball looking at this stuff, you think, well, that can't be right. In some places, you will spot places where, you know, figures go from 0 to enormous over a year, and you just think, well, that's almost certainly due to some kind of misreporting or some failure. So there will be errors in there, but this is the best available data. It is pretty solid in terms of believing that. And frankly, if we want better data, if we want better numbers, that we need better data. Sorry, if we want better numbers, we need better data. And probably the one thing that we believe would help us the most in helping to estimate some of this would be if the Bank of International Settlements was able to release its data about the money held in bank accounts from other countries. We are interested in anyone who has any ideas as to how we could make that happen, because we're not sure. We would like it to. So impacts. The most obvious impact is simply the money lost to countries. When you're talking about this size of outflows from countries, you have a very obvious impact in terms of the ability to fund services, opportunities for investment, domestic investment, savings, and so on. Sometimes there's a bit of confusion around this. This is money that flows out. It's not tax avoided, but when that money is lost, you can assume up to I would say up to 30% of that could have been money available to be taxed if it had been taxed effectively. So around 30% of that could be seen as potential losses in terms of tax. But this is all money that is lost to the economy. It's all money that could have been available for investment, could have been available as savings, could have been available for consumption. This is money that would have contributed to the economy. So it's not enough to say, oh, it's not tax, you know, it wouldn't have been taxed, it doesn't count. It is all linked to potential development and economic growth. Right, I will move on. I think there's some examples coming, so I won't touch on any specific examples, but there are plenty out there. There's Global Witness is an organization we work with very closely. They have some excellent case studies and examples of the kind of nitty-gritty, the detail of how these things actually happen. I guess one thing, you know, I would note they have an excellent piece on the role of British banks, for instance, in taking money out of Nigeria, with quite a lot of detail. It's well worth seeing. They also have, and I would definitely recommend this, a video of an undercover report they did, where they sent a reporter into Malaysia who got involved in, you know, pretending to be looking as an investor, and was basically put in touch with a lawyer who described in very great detail to the camera exactly how he could help this person avoid tax through using Singapore, shell companies in Singapore. So if you have a chance, have a look at that. It's on the Global Witness website, and I think that would be, it's about 15 minutes long, and it's one of the most instructive 15 minutes I've ever spent in my life. I can't recommend it highly enough as an opportunity to get a view of this. So that's sort of what they are. That's the kind of size. As well as the money lost, there are some other impacts. So, I mean, we're also talking about contribution to inequality. This money tends to be money that is removed from a situation where it may have been used to provide services to poor people or kind of consumption at the domestic level, and it tends to be instead concentrated with the wealthy. So this whole process is not just contributing to poverty, it's contributing to inequality. It's increasing and concentrating wealth. And of course, it's also a mechanism that drives corruption and criminality. So there are other kind of impacts as well as the pure financial ones. And I think that's always worth bearing in mind. In terms of solutions, I won't, again, go into a lot of detail, but Christian A, we work with a group of organizations under something called the Financial Transparency Coalition. I've just come back from our conference recently. It's nine global organizations that have come together, worked together very, very closely, and to tackle financial transparency, to tackle some of these problems that lead to illicit financial flows. The critical things we've identified as issues that we work on. So the issue of beneficial ownership, making sure that people know who owns companies wherever they are, you know who you're dealing with. That is something that the UK is now leading on, and we're very proud of that. It's something that we campaigned hard for, along with others, and we just want to see that whole process of making company ownership open up to the public become a global one. country-by-country reporting, getting companies to report their activities, not just their accounts and their tax paid, but also the assets they hold and the staff they have on a country-by-country basis broken down. That doesn't happen at the moment, and that means it's very difficult to understand how companies are doing business and moving their profits around. If we had country-by-country reporting globally and consistently, we would have a far better idea of what was going on. Automatic information exchange, so getting countries to exchange all information, not just on demand, which we have at the moment, but increasingly as an automatic factor. That is coming, that's happening. However, we are concerned that developing countries will be excluded from that, and that is a concern because of a demand for reciprocity, that you can only have the information if you're prepared and able to provide it, and that may be a barrier in some cases. Open data, making sure that this kind of information is provided consistently globally in a format that everybody can use, so mobile devices and so on. You should be able to access this kind of data, whoever you are, wherever you are, in a consistent way and compare it to data from other places. That's quite a big challenge, and that's something we're increasingly realizing we need to work more on. And then the whole international architecture, how is this stuff managed at the global level? That's another opening discussion. You know, there is no kind of consistency in our opinion about, you know, who decides and how these decisions are made. Not always transparent, not always, and especially not always inclusive of all countries where these decisions are being taken that affect some of these questions. I'll stop there, but hopefully I look forward to the other presentations and to any questions. Thank you.
Thank you very much, Toby. Strong pointers there on a number of the issues. So already we've plenty to think about when it comes to the questions. Our next speaker today is Tim Daniel. Tim is a partner in the litigation department at Edwards Wildman Palmer UK LLP. He actually founded his previous firm's international law practice. He has acted for a number of governments and parastatals, not least in the developing world. That has included representing states before the International Court of Justice in The Hague, with international arbitration, boundary disputes and the like. He has extensive experience of asset tracing, both in the commercial and insolvency sector, and currently on behalf of states. He is actually listed as a leading individual in public international law in Chambers and the Legal 500 directories for the past several years. Tim is also in the latest edition of Best Lawyers in the United Kingdom for public international law work. He is recognised as a contributor and spokesperson on anti-corruption and asset tracing, interviewed frequently in various media organs. He's currently acting for several governments and anti-corruption commissions, recovering assets looted by former heads of state and high-ranking government officials. He has advised governments on anti-money laundering and proceeds of crime legislation and the setting up of anti-corruption agencies. So we don't just have Christian Aid and their report on a study of tax and morality preaching anti-corruption. We also have Tim here today helping us to literally practice anti-corruption.
Thank you very much, Mark. I'm sorry, that CV was very embarrassing. It wasn't one that I put in, which was about 3 lines long, and we certainly didn't focus on my achievements. But I will start by just telling you how I sort of got into this business. Back in 1976, when I was an article clerk, or trainee solicitor as they're now called, with a small 5-partner firm in the City of London, we, by chance, got the Nigerian government as a client. And in 1976, what had happened was that OPEC had hiked up the price of oil in such a way that a number of oil-producing countries became very rich overnight, including, of course, Nigeria. Most countries embarked on substantial infrastructure projects, building schools, universities, roads, hospitals, etc. Nigeria, which of course was a military dictatorship, what did they think to do with their newfound wealth but to build military barracks all around the country? So they took advice as to how they could procure the cement that they needed to build these barracks. They asked an Englishman, and perhaps this is where Mark's joke comes in, because it's probably well known, the question why the sun never set on the British Empire, because God would not trust an Englishman in the dark. And I think that the advice which that Englishman gave, which was that because of all this infrastructure work, there was a worldwide shortage of cement, and therefore the Nigerians should order 10 times as much as they actually required, which they went ahead and did, certainly demonstrates why God never trusts Englishmen. Because what actually happened was that every cement factory went on to overtime, and the Greeks piled the cement into their ships, and it went down to Lagos, which at that time could only discharge one cement vessel a week. So by the beginning of 1976, there were 400 vessels waiting to discharge their cement cargoes, which is about 8 years' worth of vessels. Unsurprisingly, the Nigerians cancelled all the contracts, revoked all the irrevocable letters of credit, and then the litigation started, and that was when we came in. It became a long story because initially we pleaded sovereign immunity and we won, and then Parliament, Lord Denning overturned us, and then Parliament said we're not having this, and passed the State Immunity Act, so that countries cannot hide behind state immunity when they are commercial parties to contracts. So it all went to arbitration. So that went on for about 15 years. So I got to know the Minister of Justice quite well, and then I advised them on their boundary with Cameroon. And then while we were in the middle of that case in the ICJ, the then dictator, General Sani Abacha, died. That was in June 1998. And I think everybody knows that he was notoriously corrupt. And that really set me down the path which I've been following ever since, which is basically to try and recover assets, particularly for African governments, but also Indonesia, Pakistan, which have been stolen by their leaders and public officials. I made a sort of short list of the sort of tricks that they get up to in order to get the money. Interestingly, the UN Convention Against Corruption doesn't give a definition of corruption, but if you take those various activities together, that's probably a pretty good idea of what is corrupt activity. So the illicit funds that I'm talking about are very much monies which have been obtained through bribes, through robbing the treasury, etc. And of the three case studies that I mentioned there, Sani Abacha notoriously got the majority of his money by writing funny little letters to his national security advisor saying, we need, firstly, $2 million to help publicize the fact that Nigeria is a jolly good country and should be invested in, and to resist the allegations of corruption which are being made against us. And he got, that was from the National Security Advisor to the President. The President signed it off, it went to the central bank, and the central bank doled out $2 million. And that once they saw how easy it was and how successful it was, by the end, which was, I suppose, about 3 years later, they were getting 500 million out. So that was why and how Abacha lined his pocket to the extent of over 2.5 billion. But in addition, he was receiving bribes and kickbacks, etc., through members of his family. Altogether, it was reckoned that he took 5 billion. We were asked to act for the Nigerian government in civil proceedings, which we brought in the High Court here, because he was dead, they couldn't bring criminal proceedings. And we were part of an exercise which has ultimately resulted in the recovery of about $3.5 billion, which is, I think, probably still the world record for recovered assets. But more fundamentally, that case had the effect of focusing the attention of the UN and the World Bank, and so was born the UN Convention Against Corruption, which obviously has been a major step forward in fighting corruption and illicit funds. Another Nigerian example was a Nigerian governor. Toby mentioned the work of Global Witness. They produced an excellent booklet on Alamasea, as we call him. He basically amassed his money through so-called political donations and basically robbing his state and taking bribes. He also, interestingly, made false declarations of assets. And that was how basically we were able to nail him. Again, the police here tried to prosecute him, but he, of course, notoriously escaped jail. And so, as they didn't have anybody in the dock, they also had to proceed by civil means. But we got the court to order that the criminal evidence which had been assembled by the Metropolitan Police should be handed over to us, and we used that in the proceedings. He took, I think, probably about 50 million altogether. He bought a nice waterfront apartment down in Cape Town. He had offshore companies in the Bahamas, and he had various properties around London. And all of those have been recovered now. My third example was Frederick Chiluba, the man who never wore the same suit 2 days running. He was the president of Zambia, and he set up a company called Zamdrop, through which he basically channeled all the bribes and illicit contributions that he received. And again, it was the subject of protracted high court proceedings, civil proceedings, which resulted in the recovery probably of about 50 million pounds. So those are examples of what can be done when the money goes walkabout. But obviously of greater interest, and this is what one's become increasingly involved in, is how do you stem the flow? And so a lot of the work that I've done has been advising on setting up anti-corruption commissions. And there's all sorts of question marks over anti-corruption commissions. I mean, it's a start. The UN Convention encourages the setting up of them. But you can read a couple of the comments that are made there. Frolics in failure and carpet bombing by the ICAC. The ICAC is the Independent Commission Against Corruption in Hong Kong. And they were the first people to come out with a credible model of an anti-corruption commission. A lot of African states have simply followed that. But it needs to be thought about very carefully what each state actually requires of its anti-corruption commission. For example, should it have investigatory powers and prosecution powers? Should it have jurisdiction over elections? Should it educate the population? In Kenya, they have a very good education program. Kenya, or the Ethics and Anti-Corruption Commission does. In Nigeria, interestingly, the EFCC, Economic and Financial Crimes Commission, oversees the codes of conduct under which we were able to catch Alamasea. And also a question of whether they have jurisdiction over the private sector, which is always extremely difficult. So plenty to think about. One of my co-authors of a book we've written called Corruption and Misuse of Public Office, which is published by Oxford University Press, a guy called John Hatchard, who's professor at the Open University. He's just done a very interesting paper for the Zambian Law Review, which is entitled Anti-Corruption Commissions in Africa, Time for a Change of Direction. And I do commend this article to you, because if you're interested in this topic, it does lay out very helpfully the various options which are open to anti-corruption commissions and how a number of them have failed to date. Unfortunately, you can't read it yet because it's going into the Zambian Law Journal, but it will be published shortly. You've got my email address at the bottom of the page. If you're interested, send me an email and I'll try to ensure that you receive a copy of it when it's published. So that's about all I've got time for, but hopefully, again, it'll give you some food for thought as to how this terrible plague can be dealt with. Thank you.
Thank you very much, Tim, and again, touching on a lot, and a lot more for us to possibly open up on questions. The final speaker in the panel this morning, before we move to the floor, is the Honourable John Cheyo MP, who has been a member of Parliament in Tanzania since 2005. I've been a member of Parliament here since 2005, so there's a coincidence. Not the reason why I was given this gig, I can tell you. John is the only sitting MP from the United Democratic Party, and is also the chair of that party. He previously in the Parliament chaired the Public Accounts Committee, and he also remains a member of both the Public Accounts Committee and the Budget Committee that has been recently formed there. He currently chairs the Tanzania Centre for Democracy, which brings together all political parties to promote multi-party democracy, and has also been very involved in the country's recent constitutional reform negotiations. Of some experience of those myself as well. John has contributed to a number of publications on the Tanzanian Parliament, focusing on financial responsibility, and is also someone who has addressed the issue of African parliamentary reform. So, John, you're very, very welcome.
I really don't know where to start, because after hearing all these excellent, presentations, however, basically this is a bird's eye view from a parliamentarian point of view, and what we are doing in the Parliament, particularly in Tanzania, as a reference point, to combat, corruption as well as illicit, flows. Maybe I could just begin by saying that, corruption and illicit, outflows is a big business. So if you are dealing with big business, then you know what you are up against. But obviously, I can also say we know the effects of corruption. There's no wonder we cannot actually define corruption, but the effects of corruption are terrible, particularly in developing countries. For once, corruption undermines all democratic processes in effect, because then people elect because we presented good, policies, or because we are paid. So there's a lot of this. So if you want to have good governance, so the ballot paper is the best way to get there. But is it so in a lot of African countries? I think this is a question mark. But this is due to, to corrupt, practices. Obviously, when you have a lot of corruption, then people want to come to invest, in countries like ours are a little bit worried, whether they are going to get, a good investment environment, etc. And this, of course, will deter FDI flows in a lot of these countries. Well, as I said, it's a big business. According to the East African Commission for Africa report of 2010, it suggested that, corruption costs about $148 million annually to some of these African, countries. And as far as outflows are concerned, it suggests over the last 30 years, more than 1.4 trillion has gone out of a lot of these African states to different capitals. And this is approximately 4 times the total GDP, of Africa. So the thing is big. That's why I said it is a big business. Now, only reflecting on this, I decided, how do I really contribute to this particular discussion? Where I thought the best way to see what are the major factors which, contribute to the continued existence of corruption, particularly in a lot of these African countries. I think one is its institutional weaknesses, and I will go that in slightly more details. The next thing is the deteriorating standard of living of the people, particularly the ones who are, in various positions. And lastly is the problem of private interest, and they think they can get, more profits by corrupting, different officials. And I'll try and tackle some of these things. Now, when I go to strengthening of institutions, I come from Parliament. The first institution is Parliament. I think if you've got a strong Parliament, which means strong parliamentarians, then they get involved in this device, and therefore they will legislate, to control some of the vices of corruption and illicit outflows. So we've done a lot in Tanzania in terms of strengthening the parliament by, in 2008, we put it together, the act of what you call Parliamentary Administration Act, which gave more independence to financial independence to Parliament, and which means also, therefore, is able to spend more money on capacity building, of members of Parliament. And I speak here, we have 10 members of Parliament here who are here for just that particular purpose, and they are members of the Budget Committee. Not only that, we are in the process at the moment of establishing a budget committee, so we can actually look closely at the actual allocations, of monies which government is giving to the people. And furthermore, the way we are set up, in our Parliament, there is always an annual declaration of every member of Parliament, of your assets as well as your bank balances. And the Ethics Committee can go into any member of Parliament, account and check how much money you have and what has been, these fluctuations and things like that. And this is not only for members of Parliament, but also for top officials. But also, our Parliament is televised. I mentioned this. By televising Parliament, you get the whole public, interested. Actually, fact is said in Tanzania, people enjoy maybe looking at Parliament or television or programs on Parliament are probably more popular than watching Manchester United. And then engagement of the media is also, these topics on corruption are probably the most popular. And this, when they come up, they're picked up by parliamentarians and they come on the floor, of Parliament. Civil society also have quite an important role in our country, and they're pretty active in trying to show what issues are taking place. Another institution which we think is important, should be developed, is the National Audit Office, because that's really the base for whatever reports and what is happening on the monies. And also the National Audit Office can come up to show, what illicit, outflows and what could be corrupting practice, particularly in implementing various, construction or infrastructure, development, contracts. And so we've done a lot in that particular area, making sure that the National Audit Office gets the money via Parliament by only approval of the Public Accounts Committee. We've guaranteed independence, of the Controller and Auditor General, and also the government has to respond on your Public Accounts Committee reports as well, and also all this are debated, on the floor of the Parliament. So if there are any, illicit outflows, this will come to the public. They will also be debated, openly, in Parliament. Another area which public procurement is also an important area. As you know, 80% more or less of whatever money which is authorized by Parliament ends up in a purchase of in one way or the other. And that's where, corrupt issues take place. 10% per every contract is a lot of money when you got a big budget. So, and things like that. So we've developed a Public Procurement Act of 2001. There is now increased transparency in tendering. and people can also go into litigation if they are not satisfied the way the tender has been awarded. Please control me on the time if I'm getting too verbal. And another area where we put in a bit of pressure from Parliament is the prevention and the combating, corruption, PPCB, which I'm sure you've helped probably. One of ideas have also come to Tanzania. But this one has got a high level of support from parliamentarians. We are also, in terms also of money, but also we have an association called ABNAC, at Parliament, which gives that moral support, to this particular institution. Let me also mention a little bit about the Treasury, because the Treasury, that's where all the money comes from. So we've again revamped our Public Act Finance Act of 2001, where more issues and more steps are taken to control, public spending, as well as, issues which appear as corrupt or illicit outflows. There is also a lot of work which is being done on the tax administration with the TRA. Actually, currently, we are looking at revisiting our VAT, laws and also the administration of taxes. So there's some of the issues, but we didn't stop there. Judiciary is also an important area because, as you know, while you can catch a thief, but if the thief is not, punished, then there will be more thieves coming in. And we think it's important to look at the judiciary. So Parliament has put in place, the Judges' Remuneration and Terminal Benefits Act, to sort of guarantee the retirement, benefits of judges. Because if you are worried, you come at 60, and you have not put up a house together, and somebody comes and say, this case, if you get a little bit of this, then you don't have to be so stringent, then of course, the results. So we think the judiciary area is very, very important, that it should be also revamped. 3 minutes, very good. I think I won't go too long. Financial institutions also. We've put in place in what we call anti-laundering, registration. So now if somebody comes with a bag of money, as with some of the cases, and you look a little bit suspicious, you can call a financial intelligence unit and they will catch the person. And this is not unusual. There have been people who have been caught. You have only 1 million shillings in your account for 5 years, and suddenly you have 500 million, so you have to account for that. I could go on. Let me just mention a few cases of examples where we think we made mistakes and money has gone out. We are not too proud of what we did with the MDAs, as Management Mining Development Agreements. We think with the gold mines which we have in Tanzania, I think we lost a lot of money due to bad, agreements. For instance, royalty was only repaid 3% of gross. At least now, after negotiation, is at 4%. Local government could not get any money. It was limited to 200,000. Now local governments are getting up to 0.3%, and some of the local governments have got up to $1.8 million. So we think as we get now gas, they will be clever in developing better contracts, so that people just, okay, we want investors, but we don't want investors just to put in their money and take everything out, without really leaving something for the, for the people. So there's a pre-shipment, which I just want to mention this to show that government, and particularly Parliament, we had a pre-shipment issue where everything which you go to Tanzania has gone to be inspected, and there's a charge. But somebody devised a very nice system where all the money for those charges was basically ending up in his pocket. So we discovered this at the Public Accounts Committee, put it in Parliament. We are pleased government took action. Minister was fired, as well as the head of the accounting officer is now in jail serving 3 years. And there are several, I'm sure my friend here will probably have even more, examples. Let me finish by saying issues of illicit outflows, particularly out of these, developing countries, is, in my opinion, a crime against humanity. And it requires, really, the effort of everyone. So, really, I'm lobbying, that everybody should be involved, should be interested. But it is better to prevent this rather than pushing these countries to beg money or to send aid. I think we can stand on our own if there are less illicit, outflows out of Africa and there's less corruption. Can I end there? Thank you.
Okay, thank you very much, John, for underlining that corruption and illicit outflows is big business, but increasingly as an issue it is becoming the business of many people in Parliament and elsewhere, but particularly those of us in Parliament very much prompted by the sort of very good campaign work highlighting a number of these issues from people like Christian Aid and others. It's an opportunity now to move to questions and